Forecasting and cash flow calculations do not need to be hideous, painful spreadsheets that you can make no heads or tails of. They can really be highly intuitive and super simple. Hi everyone, it's Tina with Picture It Personal Finance, where I help small business owners and entrepreneurs, as well as professionals, overcome the challenges in their daily life that is related to their money management. One of the things that I frequently help small business owners with especially is making sure that they have a clear sense of their cash flow, where their cash is today, how much is coming out, and how much will they have in the future. As you guys know from my many videos, I love the profit first approach for small business owners. I employ it for my own business, and it's what I teach my clients to do. In the profit first approach, you've got multiple accounts, including the income account, the profit account, the tax account, the owner's pay account, and then your operating expense account. Sometimes there's other ones, and I'll give you an example of that when I show you what the operating expense cash flow budget looks like that I will build for my clients. Those other accounts have limited transactions that come out of them. So for example, your owner's pay should only have 2 transactions a month and it should have ample cushion in it. You should know what your paychecks are going to be ahead of time. I have a video that explains how to consistently pay yourself. I will link that for you. Because of this, you do not need to create a budget for your owner's pay account or owner's compensation account. Similarly, the profit account is for reinvestment into the business or a quarterly or semi-annual bonus. You're going to have very few transactions in that account. You don't need to budget for that. Tax account. This one might require a budget depending on the frequency with which you pay your taxes. You may need to ensure that you're always depositing in a sufficient amount to cover whatever your estimates may be. But for somebody like me, right now, I only pay my taxes annually. It's essentially a savings account. I don't need to budget for that account because I'm only going to make one withdrawal from it at tax season. But the OPEX account, that's a whole nother story. That's the account where all of the expenses come out. So I want to share my screen with you, show you how I have built this for my clients so that you can get a sense of what it might look like for you. Okay, so this is what the template looks like that I provide to my clients when it is that we are building for them a cash flow budget. This cash flow budget, again, is specifically for their operating expense account. And frankly, this is very similar to the one that I use for my own business. A couple things that I want to point out that I really love about this format is that it is the full year in one fell swoop. You can see that it's broken into the 4 quadrants or 4 quarters, and that each quarter then has its respective months included. In fairness, I do have other clients that don't want a quarter view. They really want it where each quadrant really ends up becoming its own month. So instead of it being quarter 1, quarter 2, it'll be like January, February, March, April, and then we can take it down through the rest of the year. And then rather than having these columns represent a month, they would end up representing a given week of that month. So instead of it being January, February, March, it'll end up being, January 1, January 7th, January 14th, and then January 21, assuming there was that last column. The main thing I want you to see when you look at this global view is that the starting balance for the beginning of the year is there at $1,500, and you have an amount left at the end of the year right there at $32,3382. Now I am going to zoom in so that we can look at this a little bit more closely, but the most important thing that I really always force upon my clients to see is that this is forecasting. And forecasting does not need to be those hideous old spreadsheets that you learned in your economics or business classes. It can be this simple. Ultimately, what you're looking at is a starting balance, your deposits or any capital injections coming into that operating expense account, and then whatever your expenses were. So here are some expenses for a Facebook ad, for a WordPress domain, for a 21-day challenge, and then for another Facebook ad within the same month. You are then left with the amount remaining And then underneath, you can see what your total income was into that account. This wouldn't be your total income for the business. This is only your income for the operating expense account. Because remember, in the profit first model, this will only be a portion of your total income. So if you're already at your target allocation percentages, for most people, your operating expense will take 25 to 30% of your total revenue. So this $425 would represent 25% of the income or revenue generated that month within this business. This part down here is just for you to see if on any given month your expenses exceed your income, which wasn't the case on this month, but you can see here that it was. This dollar amount for the amount left gets carried up to the amount left in February. Then you see the new deposits that were made during that month. And you see there were some expensive items that came out. So errors and omissions insurance, another Facebook ad, a copywriter was hired for maybe some blog posts, and there were some state filing fees. The amount left is still positive, so you can see they haven't gone in the hole because they started out with the $1,781, and yet in that month their expenses were greater than their income into the account. So the difference was a minus $281.37, but again highlighting that the account stayed positive. That gets carried over into March, and you can see how this flows so easily. That month they had a better month. They had $575 deposited into the OPEX account, but they had a pretty expensive accountant, and therefore they were left with $1,581.15. Even so, they did out-earn or have greater deposits into the account than were the expenses, so that number stays positive at $80.81. So at the start of this quarter, the account balance was $1,500, and at the end of the quarter, it was $1,581.15. That is what then gets carried over into Q2. In quarter two, it starts with that balance. You see they had another decent month in terms of OPEX deposits, but there was more insurance that had to come out. And then also here's the introduction of a tech replacement. The tech replacement represents a sinking fund for this business. This business has decided that their laptop will need to be replaced within 5 years, and if they save so much money every month for those 5 years, they'll be able to buy a new laptop in full. This tech replacement sinking fund would represent a different account than the operating expense account. So it's essentially a savings account that gets funded from the operating expense account to the tune of $40 a month. Then in May, you see it continue again. So you've got the $1933.37 left over, or $1933.17 left over. They have some deposits. They also happen to have a capital injection that month. And they really dug into some personal development. So there was a challenge. Who knows what that was? Maybe that was a challenge to their Facebook group, and the winner of the challenge would receive a $99 gift card. Here was another personal development thing. Some marketing materials were purchased. And then again, there is that sinking fund. Amount left is $1545.14, which gets carried over. And then you've got another deposit into this account for $450, but another capital injection of $2,000. And there were some more expensive items that came out. It looks like there was a Chamber of Commerce annual due, a luncheon, and more personal development. And then again, that tech replacement. If you go down to Q3, you see more things coming out. So this is where the website and the scheduling equipment or scheduling tool along with additional equipment all came out, and yet they still remain positive. The reason to me that this cash flow budget is so helpful is because you can then see, like, what if they were invited to be part of a retreat let's say they were part of a retreat in September. It's the end of summer. There's going to be this great retreat out in the mountains, and they're super excited for it. So they decide to participate in that retreat, and that retreat is going to cost them $3,000. Now, they're not sweating it, right? Because there is $3,000 left over after they have made their deposit. But what I like about this spreadsheet is that while they might be in the green, they had some forecasted expenses that would come out in October. They had to pay Zoom, they had to pay Microsoft, and they had to pay for the mastermind that they're a part of, which left them in the hole $8.18. So by inputting information in September, even though they would have been whole had they only been looking at the balance of the account and had not been thinking about the upcoming expenses, they might not have realized that they would no longer be whole in October, that in October they would go negative. Now, if they did that, they would quickly recover, right, with their deposits coming in for the following month. But how long would that last? Well, I mean, for the end of them in this year, it didn't seem like it would be a problem based on how this template was built out. But that right there is problematic, and you would never want to let your account go negative. And again, this is a form of forecasting. I just want to highlight how you can use this tool to catch when you would make yourself go negative to ensure that you always stay in a positive cash flow. And it doesn't have to be this tedious undertaking that is very difficult to think through. I mean, all you really have to do is keep track of your annual expenses or your monthly expenses. So for example, you can see that this person had Zoom coming out on the 14th of October. They had Microsoft coming out on the 3rd of October. Going back over here, they had a WordPress fee coming out on the 7th of July and Calendly on the 17th of July. So again, you guys, so many people come to me and think that business finances are such a challenge, but if you have a solid account strategy and you have a fair sense on how to manage your cash flow, it can be so much simpler than anticipated. All right, guys, now I hope you can see that forecasting and cash flow calculations do not need to be hideous, painful spreadsheets that you can make no heads or tails of. They can really be highly intuitive and super simple, and you can do this for multiple years. So even though I only showed you that spreadsheet for 1 year, you could easily carry that amount left over balance to the start of 2022 and have a whole nother cash flow budget created for your operating expense account. And then you would just plug in where those expenses are going to re-show up again so that you make sure you're always in the positive. If you guys found this before watching my other Profit First videos, you may find those really interesting, and so I will leave those for you as a link at the end of this video. As always, I hope you are having a wonderful day, and I will see you in the next one.